Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 30th of July. All right, let's just get straight into it. The Fed was the main action yesterday, or the day just gone. Jerome Powell was a little bit, less upbeat. If anything, a little bit more downbeat, which is over here. So basically saying, well, spelling out the obvious, the coronavirus is slowing the economic recovery in the US. That's a natural thing that would happen, you'd expect. And with that, it just took the pressure off the dollar. Like, is the dollar going to bounce back or not? It just gave it a little bit of a damp tone. It hasn't really raced away, but you know what I mean? It just confirms that the dollar is weak. They're not trying to make the dollar weaker. They just make it is, going that way. So just look at the dollar index. It continuing to go lower. As I said, it hasn't been like a massive sell-off, but it just confirms this current downtrend is in play and likely to stay that way, right? So that's pretty good for us, looking for opportunities to get involved. The dollar is acting pretty much the way it should across all major currency pairs, and that's a really good thing for us. Gives you confidence to get into trades and go with that current trend. Now, just having a closer look at the risk on, risk off profiles. If I just move my little mouse. Okay, US equities, once again, the equity markets aren't really in the game at the moment. There's no fear in the market. The volatility index, the VIX, is back around 23, which tells me the market is very comfortable with what's happening. And that's what we're talking about, is the dollar drifting lower is a very comfortable place to be. If you look at the correlation matrix here, you can see which pairs are sort of moving most with the Dow in particular. You got the Aussie, Kiwi yen. The best thing about this is you don't have to go fishing and looking through all your charts. You can work out which pairs are really connecting with certain instruments. I'm talking about equity indices and those sorts of things. And it can make trading or working out what pair to trade a little bit easier, right? So you'd expect, so there's no major movements. And the good thing is, if I just come back to the charts, if you have a look here, like yesterday, some of the pairs did get a bit of a wobbly boot. You can see here, Euro was sort of just drifting sideways through that support line, right? It had lost that sort of upward momentum. And I was sort of thinking we might see a little bit of a pullback, maybe like 40 points. We didn't really get any of it, okay? Which tells me the market is very comfortable with being short dollars. If anything, I'll just blow Euro up here. You can see the sort of price action through the support line. And finally, it did have a little bit of a push through, but really it didn't get below this area of congestion, which was just below there. So all I'm doing today is to get this back in line, is redraw that support trend line. You can see there it is right here, 117.43. And this trend line at the top here is a daily trend line as well. If I just give you a look at the Euro here, this puppy here is about to go pop. And I tell you what, there's no levels above here. Okay, so this is quite interesting. It's a bit of a build up. You'd expect a stop loss run, a decent stop loss run above 118. It should get us up towards 120 pretty quickly. But even above there, there's no sort of resistance level. So you know what, we're really set up. If the dollar does take a real bit of a slam, Euro could jump up 5, 6, 7, 10 cents pretty quickly, as some of these other pairs will as well. So just having a look what we've got at the moment. Aussie is still cruising to the top side. Aussie and Kiwi are a little bit lackluster when you compare it to the moves we're seeing on Euro and Sterling in particular. Also, you can see dollar CAD coming back towards resistance here yesterday. Okay, had a bit of a flutter. Now it's held, and it's confirms once again that it's tracking lower and sort of breaking that connection with oil just at the moment. And dollar yen's now losing its mojo, and it's just starting to trade sideways as well. So basically, to me, the whole trend situations are the same. Euro, Aussie, Kiwi, Sterling up, dollar CAD, dollar Swiss down. Dollar yen still down, but it's now sort of getting in no man's land as far as a technical opportunity goes. And to wrap that up, if I bring you back to the daily market insight, you'll find all those various components here, right? So the market direction, well, you don't have to be a rocket scientist to work out that the dollar's going lower, okay? and we've got some levels to work with. Some of these retracement levels haven't really worked for us so far this week. Okay, but I tell you what, it saves you getting in at the wrong level. And so just keep an eye on those pairs. You know, if the pairs are going down, right, don't fight the trends. Okay, these are going down, look for selling opportunities. Just because you may have missed the entry to get short doesn't mean you get long trying to pick a bounce, right? That's one surefire way to start losing some cash. These other pairs, they're going up, right? So look for levels to get long, and that's how you're going to build capital, stay out of trouble, and but you're just going to be patient, wait for the retracements, okay? So that's the key component to building your cash. All right, guys, that's it from me. Nice, steady trading conditions. I like it. We haven't seen too much from Donald, which is a good thing. The US-China situation is still out of the news as well. Until there's a big change, the dollar should continue to drift lower. All right, guys, have a good one. Cheerio.